You just saw the
Recent
video
bloodbath,
before this
Hedera's
one,
HBAR
the one that
token
teased
has
adoption
risen nearly
milestones and quietly hinted at
16%
enterprise
in the last 2
integrations,
weeks as the
and you
Federal
probably felt
Reserve's
that little
instant
jolt,
payments
that wait,
platform
what
FedNow listed
moment.
Drop as
That's
a
not
Hedera-based
coincidence.
micropayments
That
platform
feeling is your
as
brain
a
noticing
service
something
provider
important.
joining us now.
HBAR, even before price charts move. Hedera Hashgraph, HBAR, is entering a phase where it's no longer just another crypto asset. It's becoming infrastructure that people
we felt like was really interesting because you've got Bitcoin, you've got now Litecoin as well, which is money. You've got Ethereum and Solana, which is more protocol transactions. But HBAR is the largest enterprise transaction software, and it's really not even a blockchain. What other people might think about it, it is a cryptocurrency, but it is a different type of information gathering input output system. And we wanted to bring that to market because it's been utilized very broadly in enterprise for years. And it was important to bring that to market pretty early, given its importance as a number one, a top 20 token, but also as the top enterprise token. So we thought it was important to bring it as soon as the SEC released their generic listing standard.
Rely on. And when that happens, price follows in ways most people fail to anticipate. Here's the thing about HBAR. For years, people treated it like a regular token, something to speculate on, something to watch for short-term pumps. But HBAR has always been different. Its design, its governance, its architecture, its enterprise grade. That means it was never built for hype. It was built for speed, scalability, and security. And now, years of quiet development are starting to show results that matter in the real world. If you think about it, every major move in crypto comes from necessity, not hype. Bitcoin was never about memes. It became digital gold because it solved a real problem. Ethereum wasn't about quick gains. It became a platform because it enabled decentralized computing. Hedera is now reaching that point where the real-world utility is becoming undeniable. And when utility becomes undeniable, adoption follows. The recent updates are signals, not noise. The network is rolling out enterprise partnerships, governance participation is increasing, and transaction throughput is being tested at scale. These aren't flashy announcements designed to pump price. They are the building blocks of sustained demand. And sustained demand is the only type that truly drives long-term value. One of the biggest misconceptions about HBAR is that price moves first. It doesn't. Systems move first. Adoption moves first. Real use cases move first. Price moves last. And often feels sudden because everyone notices it only after the infrastructure has already matured. That's exactly where HBAR is now. In the invisible build-up phase that most retail investors completely ignore. Experts are watching metrics like transaction volume, network reliability, and corporate integration speed. They are not looking at social media sentiment or hype cycles. That's important because it means any price movements we see over the next months will be structurally justified, not speculative. When companies integrate HBAR for supply chain management, decentralized apps, or enterprise governance, they create ongoing operational demand. This demand doesn't disappear overnight. And that's why HBAR has a fundamentally different trajectory from coins that rely on retail attention. Now, I know what you're thinking, okay, but what does this mean for me? Here's the subtle but crucial point. BAR's value isn't measured in daily price swings. It's measured in network adoption, usage frequency, and system reliance. Those factors compound quietly. Every transaction, every enterprise deployment, every governance vote adds layers of value that eventually show up in price. This update is a signal to pay attention, not panic. If you're watching price charts alone, it might feel stagnant. That's normal for infrastructure projects in their accumulation phase. But the underlying system is strengthening, adoption is scaling, and liquidity requirements are quietly rising. When all these factors align, the repricing phase will arrive, and to the unprepared, it will feel sudden. Experts repeatedly point to 2025 and 2026 as key adoption milestones for HBAR. Not because of arbitrary dates, but because that's when enterprise integrations, governance participation, and network scaling are expected to converge. Once that happens, price starts to reflect real-world utility. And when price reflects utility, it often moves faster than anyone anticipates. because markets only reprice after reality is undeniable. So if you've been waiting for the right moment with HBAR, this update is exactly why you should start paying attention. Not because of hype, not because of speculation, but because the system itself is maturing, quietly, methodically, and inevitably. Let's break down why this HBAR update is so crucial. Experts are looking beyond price charts because price is reactive, not proactive. BAR's trajectory is driven by enterprise adoption, network scalability, and real-world utility, and understanding these metrics is the only way to anticipate the next phase. Price only follows once the infrastructure has matured, and that's exactly where HBAR is right now. First, consider enterprise adoption. Hedera's architecture is built for organizations that need speed, security, and low fees. Companies don't integrate HBAR for hype or speculation. They integrate it to solve operational challenges, supply chain management, decentralized applications, data integrity, and governance. Each integration adds predictable demand because organizations must hold tokens to run their operations. Unlike retail-driven hype, this demand is continuous and cumulative. Experts are tracking adoption by corridor, sector, and transaction type. For example, supply chain integration in Asia might involve thousands of daily transactions that require liquidity in HBAR. Enterprise apps in North America could process millions of microtransactions monthly. Each adoption corridor increases network utilization, which is directly linked to price stability and potential growth. Unlike speculative assets, where value can evaporate overnight, BAR's operational demand compounds quietly over time. Another key metric is transaction throughput. Hedera's Hashgraph network is capable of hundreds of thousands of transactions per second with low fees. Experts model the network's potential value based on how many enterprises can simultaneously utilize this capacity. When adoption reaches even a fraction of maximum throughput, the network requires more circulating tokens to maintain operational efficiency. That's a structural driver of price that has little to do with social media hype. Governance participation is also critical. HBAR operates with a council of globally distributed, reputable organizations. As council members and enterprises increase their engagement, network credibility rises, which lowers perceived operational risk. That encourages additional adoption because companies prefer to integrate with systems that are stable, compliant, and predictable. Experts view this as a slow but powerful multiplier. More governance activity leads to more adoption, which leads to more demand for HBAR, which eventually influences price. Regulatory clarity plays a huge role too. HBAR has a relatively clean compliance profile compared to many cryptocurrencies, which is attractive to institutions. Experts factor this into models because when a network has regulatory visibility, adoption accelerates. Less friction means faster integrations, and faster integrations mean liquidity requirements increase sooner. That's another structural reason why experts see potential for significant repricing in 2025 and 2026. Expert models also consider network effects. Hedera isn't isolated. Its integrations span enterprises, developers, and payment systems. Each new participant increases the network's value for existing users, creating a self-reinforcing adoption cycle. The more the network is used, the more attractive it becomes, which draws even more participants. This network effect compounds quietly, often going unnoticed by retail investors. But it's one of the most powerful factors in predicting BAR's potential value. Then there's infrastructure reliability. Experts monitor uptime, transaction speed, and fee consistency. Hedera's architecture is designed to scale without compromising performance, which is critical for enterprise adoption. Companies won't commit to a network that crashes or spikes in fees unpredictably. Reliability isn't flashy, but it's the backbone of sustained adoption. And sustained adoption, in turn, creates predictable demand for HBAR. Another important factor is adoption velocity. Experts track how quickly enterprises move from pilot projects to full-scale integration. This is often measured in months, not days. For HBAR, the velocity is accelerating in regions where enterprises are actively implementing decentralized applications or supply chain solutions. Each new integration increases cumulative usage, which quietly tightens liquidity and sets the stage for a repricing event. Finally, experts emphasize the difference between hype and operational necessity. HBAR's price trajectory is tied to usage, not sentiment. When adoption reaches a critical threshold, price doesn't just tick up gradually. It undergoes reclassification. The market begins to recognize HBAR as a core operational tool rather than a speculative asset. That's when the silent buildup becomes obvious, and the movement feels sudden even though it was predictable for anyone following adoption metrics closely. In short, this update isn't just news. It's a signal that the operational phase of HBAR is accelerating. Experts are monitoring transaction volume, adoption corridors, governance participation, infrastructure reliability, and regulatory clarity, all of which compound into structural demand. Once these factors converge, HBAR is positioned for a potential repricing event that could feel dramatic, but in reality, is the logical outcome of years of methodical development. Now, let's get into timing, the part that most people overlook when they watch price charts. HBAR doesn't move on hype. It moves when adoption thresholds, network utilization, and structural demand converge. Experts are constantly monitoring these signals because they tell you when the system is ready for a repricing event, not when social media tells you to get excited. The first key signal is adoption velocity. Adoption is not binary. It doesn't happen overnight. Enterprises integrate Hedera slowly, in phases. Pilot projects turn into regional deployments, which then scale to multinational use cases. Each phase adds measurable transaction volume. Experts track these metrics, such as the number of contracts processed, the daily transaction count, and the growth of enterprise applications. When adoption accelerates past a certain threshold, liquidity requirements naturally increase. That's when price starts to reflect real-world usage. The second signal is network throughput utilization. Hedera's architecture supports hundreds of thousands of transactions per second, but its value becomes evident when enterprises push closer to that capacity. As usage ramps up, more HBAR is needed for transaction fees and network participation. Experts model these thresholds to predict when operational demand will trigger a repricing event. This isn't guesswork. It's structural math based on network capacity and adoption patterns. Next is governance participation. Hedera operates with a council of reputable organizations. Experts monitor council engagement and decision-making because governance activity is a proxy for network trust and institutional confidence. Increased participation signals that enterprises and institutions are taking the network seriously, which reduces operational risk. Lower risk encourages more adoption, which feeds back into token demand. That cycle is invisible to casual observers but critical for predicting when HBAR might reprice. Regulatory clarity is another timing factor. Experts measure how easily institutions can integrate HBAR without facing compliance issues. The clearer the regulatory environment, the faster adoption accelerates. This reduces friction, speeds up deployments, and increases token demand sooner than market sentiment alone would suggest. HBAR's relatively clean compliance profile is one reason experts are confident about its structural trajectory over the next 1 to 2 years. Network effects are subtle but powerful. Hedera isn't a standalone network. It's part of an ecosystem with developers, enterprises, and payment integrations. Every new participant increases value for existing users, which attracts more participants. Experts call this the adoption snowball, and it often creates a lag between infrastructure maturity and price recognition. By the time price reacts, the network has already established solid operational demand. Reliability is another crucial factor. Experts watch metrics like uptime, transaction speed, and fee consistency. HBAR's architecture ensures high performance and low volatility in operations, which is critical for enterprises. Stable infrastructure encourages adoption. More adoption increases token demand. Increased demand leads to repricing. It's a chain reaction that feels sudden to outsiders but is predictable if you follow the right signals. Then there's the market psychology angle. Most investors focus on price action and social sentiment. Infrastructure-driven networks like HBAR don't move in this way. They build quietly, and sideways charts often precede major moves. Experts call this the silent accumulation phase, a period where usage and adoption grow under the radar. This is precisely the phase HBAR is in now. The network is strengthening, enterprises are integrating, and liquidity demand is quietly increasing. Timing is also linked to real-world milestones. 2025 and 2026 are repeatedly mentioned by experts because they align with enterprise integration schedules, regulatory clarity, and infrastructure readiness. By then, adoption is expected to reach thresholds that trigger noticeable repricing. It will feel sudden, but it's actually the culmination of years of methodical growth. Finally, the repricing trigger itself is subtle. It is not a news headline or a tweet. It is the moment when operational demand surpasses market supply for active HBAR tokens. That's when price shifts from reflecting speculation to reflecting real utility. Experts predict that once adoption and usage reach these levels, price acceleration will happen quickly because the market has been underestimating the network's operational importance all along. In short, BAR's timing for a major move is determined by adoption velocity across pilot, regional, and global deployments, network throughput utilization approaching operational capacity, governance engagement signaling institutional trust, regulatory clarity reducing adoption friction, network effects creating compounding adoption cycles, system reliability supporting enterprise confidence, the silent accumulation phase building unseen demand. Each of these signals is measurable. Each has been observed quietly increasing over the past months. When they converge, the repricing event will feel sudden, but anyone following adoption and infrastructure metrics will recognize it as inevitable. Right now, HBAR feels quiet. The charts look flat. It doesn't feel exciting. But that calm is exactly what signals infrastructure maturation. Experts repeatedly stress that this is the phase where adoption quietly builds under the surface, and price follows only after the network reaches operational thresholds. That's what makes this update crucial. It's not hype. It's the system quietly strengthening, preparing for its next move. Every enterprise integration, every corporate pilot, every governance vote is increasing operational demand. These are real, measurable transactions that require liquidity. They are ongoing, not speculative. That's what differentiates HBAR from hype-driven coins. Retail chatter can vanish overnight, but operational demand does not. And that's why experts see the potential for repricing once adoption crosses critical thresholds. Timing is subtle but important. 2025 and 2026 are repeatedly referenced in expert discussions because that's when adoption cycles, enterprise deployments, and regulatory clarity are expected to converge. When those factors align, the market will suddenly recognize that HBAR is no longer optional. It is essential infrastructure. And when that happens, the repricing event can feel sudden, even though it was predictable to anyone monitoring adoption metrics closely. The silent accumulation phase is ongoing. Many retail investors look at sideways price action and assume stagnation, but in reality, HBAR is strengthening quietly. Enterprise adoption is growing, governance participation is rising, and network reliability is proven. All of these factors compound, quietly increasing liquidity demand. That's why the next price movement, when it arrives, will not be random. It will reflect real-world operational utility, which is far more sustainable than speculation-driven gains. Here's what you need to focus on. Watch adoption milestones, track enterprise integrations, and follow governance activity. These are the signals that precede price moves. HBAR is not chasing hype. It is building infrastructure that markets will eventually reprice. If you understand that, you stop reacting emotionally to charts and start recognizing the structural story behind the numbers. So here's what I want you to do. If this video helped you understand why BAR's latest update matters, hit the like button. It helps push grounded analysis into spaces dominated by hype. Subscribe to the channel for more deep dives into infrastructure-driven crypto, where we focus on adoption, usage, and real-world mechanics, not short-term speculation. Finally, drop a comment below and tell me, which integration or milestone do you think will trigger BAR's next major repricing? I read every comment, and your input shapes what we cover next. Because when HBAR finally moves, it won't just be a price jump. It will be the market finally catching up to the invisible adoption, enterprise integration, and system reliability that have been building quietly all along. And the people who understood that will already be prepared to act, while others will be wondering why it feels so sudden.